So joining me now to talk more about the markets and the recent momentum that we've seen is Walker Williams, Chief Market Strategist for Private Wealth at Lido Advisors. Walker, welcome to the show. And what do you make of this market momentum?
Good morning. Obviously, the market continues to build this positive momentum in various sectors. We're seeing it. Tech continues to run. Obviously this morning you had Venture Global join the exchange. There's momentum in energy. There's sustainability in different things. However, I'm going to be honest. The market's expensive today. When you're looking at long-term price-to-earnings ratios over the past 25 years, has been about 16.8. Today, PEs are in the high 20s. So that does give a moment of pause, even though momentum continues.
It's pretty impressive, I must note, as you make note of valuations. We haven't seen a correction, which many would deem healthy, at least one correction a year. A pullback of 10%, really a consolidation after strong gains. The S&P's up on average 7% a year over time. And we haven't seen a correction in a long time. What does that say about some of the sentiment that has been driving this market higher?
If you look at we do have survey data coming out today about various sentiment levels. There's really been a disconnect between what, the surveys had said and what the market is doing. We believe, honestly, near-term volatility will persist here. Obviously we have a new president, different sort of conjectures with economic policies. And, from that standpoint, as you know, corrections do and will happen. If you go back to last August, there was, a slight correction with the yen carry trade reversal. We had a little bit of a correction here in December as the market adjusted to the lack of rate cuts going forward. It's difficult to forecast what would cause it. Obviously the fundamentals today, when you look at valuations and U.S. Treasury yields being around 4.65%, typically that's a headwind and valuations have to adjust. We just haven't seen it.
We are going to hear from the Federal Reserve at its first policy decision of 2025 next week on Wednesday, including comments from the Fed Chair Jerome Powell. That comes after President Trump noted yesterday in a virtual address to the World Economic Forum that he does want to see lower energy prices and lower interest rates. How does the market absorb that?
I think this is the giant question of the dance we're doing. Can you have a pro-growth government policy and fiscal policies while maintaining inflation? That's really where the Federal Reserve, what we're looking for their commentary on is we've had a persistent jobs number. We've had persistent GDP growth, although it's tailoring down. But all those things we talk about, the reduction of energy prices does affect inflation if it can happen. However, you also have the other events out there that we're talking about. Tariffs, that's an inflationary cost. Cost of financing. Like this month alone, we've seen a plethora of new issuance in the corporate debt markets because spreads are so low. Does that mean companies are trying to get ahead of what they think is longer rates for a period of time and spreads increasing? That's a giant, question for us. With those policies tend to lead to inflation, but rates are high. How do we sort of get into a good equilibrium?
And so what you've been seeing so far, Walker, in terms of earnings, many companies exceeding expectations, that fundamental seems to be in place. Certainly economic growth seems to be in place as well. The latest inflation read that we got just about right? In line with expectations, not too hot. It does seem as if the fundamentals that the market historically moves on really are in place. What's your view?
Yeah, the fundamentals are rather resilient. I think if you go back to the fall and the summer, with the interest rate hiking cycle the Fed was doing, we'd expect some of those numbers to, not be as strong as they are today. One thing to watch from us is, obviously the labor market. There's concerns about sustainability still. What does that look like? We've seen revisions across the street in GDP forecasts, just as, this economic recovery gets a little bit longer in the tooth. Now, on the other side of this, let's talk about, the elephant in the room, AI and what that means. The AI transition we're seeing for companies and in their earnings, that's definitely a CapEx add to the economy and economic activity. So we're watching this from this standpoint. We're still forecasting economic growth to be positive in 2025, but not at 2024 rates.
Walker Williams, thank you so much for joining, of course, as we round out the week. Walker's the Chief Market Strategist for Private Wealth at Lido Advisors.